Hello, my guest today is John Markman on the MoneyShow.com video network. Hi, John, and thanks for stopping by.
Hi.
You know, last year about this time, I sat in on one of your sessions, and you were talking about the impending credit crisis and about these specialty financing vehicles, the SIVs, that I always say incorrectly. And I was amazed then because no one else was really talking about that. And since that time period, of course, we've crashed and burned. But is it really over with yet? Some advisors are saying, well, we sort of hit the bottom. But I'm not sure. What about you?
I think we're nowhere close to the bottom. I hate to be bearish. I'm a naturally optimistic person. But in this case, I think there is still a lot to worry about. All we've really seen the banks admit so far is that they've had to write down the value of their mortgage holdings and all of the derivatives that are based on their mortgage holdings. But they have so much more in their portfolios that they're going to ultimately need to mark down. Home equity lines of credit, auto loans, student loans, and personal credit loans. All of those kinds of things are going to be a victim of the recession when people who have lost jobs and seen other people lose their jobs simply stop spending as much. We've already seen that, and that is the cause of most recessions. But there has never been a recession that has come after a binge of so much credit explosion. So as people start to pull back on their spending, stop paying their credit card bills, their student mortgage bills, and their auto loans, the cash flow to the banks begins to contract.
Right.
Their bonds begin to lose value, and then all of the derivatives that are based on those bonds lose value. Because those bonds were bought with so much borrowed money, it doesn't really take a large default rate to destroy the complete value of the entire entity. So for instance, if you are leveraged, as a lot of these banks are, 20 or 30 to 1, you only need to have a default rate of about 4% to lose your entire investment.
Wow.
So as that begins to happen, and I think it will happen over the rest of this winter, the rest of the fall and into the winter, and even into early next year, I think you're going to see even more losses at the banks and investment banking companies, and you'll see their market values drop further.
Now, what do you think in terms of a number? Do we have a number out there of what this total credit crisis is going to add up to? I mean, we're already in the hundreds of billions of dollars, right? Yes.
The amount of money that banks have already confessed to losing has been about $400 billion. I thought around a month or two ago that the highest number would be about $1 trillion. I'm beginning to think now it's going to be more like $1.5 trillion.
Wow.
Which is a lot of money. And the way that banks are valued, banks have to, when they lose a certain amount of money on their mortgages and on their derivatives, they have to put it back, or they're in danger of falling out of balance with regulators.
That's what all the recapitalization is about.
They can't just wish it away. So for a while now, they've been going back out to other investors, particularly in Asia, sovereign wealth fund of Kuwait and Singapore and elsewhere. And they say, hey, can you help us out? We'll give you, a portion of our bank, and we'll pay you at some interest rate if you'll just give us some more capital. Well, that works once, it kind of works twice. But if you go back again and again to these people, they're going to say no.
Right, your name is mud.
So I think what we're going to see over the next few months, rest of this year into next year, we're going to see some major banks fail. We're going to see a lot of consolidation, where maybe we'll end up with a couple of super banks. Maybe J.P. Morgan will be one of those. And we're going to see a lot of banks simply be forced into bad mergers or just disappear.
Wow.
And until we see massive numbers of banks fail, I don't think we're going to be anywhere close to the bottom of this crisis.
Well, thank you, John, for sharing that with us. Even though it's not great news, it's realistic.
Thanks for having me.
You're welcome, and thanks for joining us at the MoneyShow.com video network.